For macroeconomic data releases from CTKSnews.com, under this Market Analysis tab, we saw the Michigan Consumer Sentiment Preliminary come in at 63. They were expecting 67.2. This shows a weakening inside the economy. This is a case when bad news is actually good news. 24 hours ago, we saw the probability of a federal funds rate increase at 13.3% for a 25 basis point increase. It's now dropped down to 8.3%. That's a good thing for commodities. In the past trading session, we saw the VIX increase, and Masterclass students, you get my live chart in TM6. When the VIX increases, often we get a flight to safety, and we witness that in the DXY. Also, there's a lot of political instability and geopolitical risk at the current time. We saw, finally, the spike in gold that we've been waiting for a few days. The thing to note is as junk bonds came down, it threw negative price momentum on the major indices. And as the US indices go, if they go down, there's a very high probability that global indices will follow. Not all stock markets open and close at the same time, of course, but the concept is we saw the S&P 500 futures, the NASDAQ, the Dow, and the Russell 2000 come down. That's put negative price momentum on so many major indices all around the world. It's very important to be aware that the Tier 1 charts, especially the S&P 500 and the NASDAQ, have control over so many markets. The same goes for the DXY. If the DXY comes up, it's going to throw a lot of negative price momentum on other Forex pairs, such as the Euro dollar, the Aussie dollar, the Kiwi, and the cable. By knowing the structural levels on the Tier 1 charts, you can predict and anticipate what the main markets could do, and that extends across global markets as well as commodities and crypto. This is because of Rule 446, all markets are intercorrelated and therefore interdependent. That means the charts all rely on each other. All charts are intercorrelated and interdependent. When we look at the NASDAQ and we mark its market structure up with the CTKS method since 1973, and to do that you just pop on the indicator, what you see is that the NASDAQ couldn't overcome this structural resistance level at 13,624. If it's not going above, it's going below, and that's where we've ended up at 13,365. This is now structural support. That's a good thing because when the NASDAQ and the S&P 500 come down, the VIX spikes. Junk bonds decrease. Typically, the DXY also goes up. What we see when the NASDAQ is coming down into a structural support area, these are like safety nets. They're catching price. As they catch price, they're like also a trampoline. They rebound it. And what we know with price and market structure, price is always moving between an SL. If it can't get above this SL, which is a Stanfield level, if it can't get above, it's going below. If it goes below that one, it's going to the next one. If it can't get above, it's going down to the next one. So the key is, where are the next structural levels underneath price if the bears continue to push the major indices down? The answer to that, it's at 13,257, and you can see a lower one at 13,253. The other thing to note, we had a fresh air gap here, which meant the price had literally nothing to stop it from decaying down, especially if the VIX started to spike up and the DXY did the same. But you can see it's hit these safety nets, and these safety nets are so far holding. We must also be aware that we could have a bullish case where we move off this structural level at 13,406 back to the 13,587 level. That would mean the VIX would spike down and the junk bonds would spike up, the DXY would come down, gold would also come down, it would get hit. That's why knowing and understanding your structural levels is incredibly important. Since the Hamas invasion of Israel, we saw gold leap up, but there were some strong structural levels, and the PPI and CPI came out hotter than anticipated, and that drove the expectation of yields up. Right now, the VIX is spiking, and gold is spiking. Typically, when the DXY increases, commodities go down in price. unless there's an external event to push them up, such as a flight to safety. We're seeing that inside gold's price right now. Also, the DXY is relatively strong. About 5 days ago, when Hamas invaded Israel, we compared that back to the Russia-Ukraine war. Initially, we had a spike and then a decrease, and then another spike, then another decrease. We're starting to witness that same behavior play out with this current market condition. That is, the dip may keep on dipping. The CTKS method is the world's most powerful structural level detection system. I'm going to pop on the indicator just in a minute, but just to explain, it marks up all of price history since 1871. Market structure laws are very straightforward. Price is always moving between them. If it can't get above and go to the next one, it's coming down to the one below. Sometimes you get climactic sell downs where several safety nets need to get hit before price will rebound. There's a lot of fear inside markets, and this is what causes cascading momentum to the downside and cascading momentum to the upside. One thing that we do note with the S&P 500, it's coming into more and more structural support levels. At this time, we would expect a bounce up to the next structural level at 43.50. If the fear continues into the market, we have a structural support at 43.25 and lower ones around the 43.13 mark. Can you imagine if you were trying to look at the market like this and say, oh, I know where the levels are, there's one there and one there, but the problem is the S&P 500 has been around since 1871. It hasn't been around for a couple of days. When people get into financial markets at the start, they ignore Rule 446. They just focus on the chart that they're putting money into or the charts that interest them. It takes many years to understand that these Tier 1 charts will impact every single investment and trade that you have. Specifically, it's the structural levels that will impact. The key is to know them. Please tune in each day as I share the structural levels across the Tier 1, Tier 2 and Tier 3 charts. And if you would like to get the indicator that I use, you can go across to ctksmethod.org. It's important to keep our eye on the crypto market. Crypto is very risk sensitive and it trades 24 hours a day, 7 days a week. How cool is that? If you have nothing to do at, say, 4:30 in the morning, on a Sunday morning, hey, why not get up and look at crypto? What we can see here is the main market sell down drag Bitcoin and crypto down with it. And there's a rule, a very important rule, that no alt can escape Bitcoin's gravity. The alts are the cryptos except for Bitcoin. Bitcoin is the number one. That means if this blue line is having negative price momentum and this blue line is Bitcoin's gravitational pull, that means that Ethereum will suffer. BNB, it's going to suffer. XRP, ADA, Doge, Solana, Tron, they'll all suffer. But you can see that the alts do something magnificent. They overextend Bitcoin's upward price momentum, and that's why we love the alts. And if you're new to the community, a very warm welcome. And just to let you know, this is my real voice. I am not a bot. Some people say, Ken, get rid of that bot voice. I can't. It's my own. When looking at crypto, it's really important to understand the yields spiking puts negative price momentum on crypto. It's also doing the same thing to the stock market. Returning to ctksnews.com under that market analysis, if you scroll down a little bit, you can see US stocks across all sectors. That's all stocks across all sectors. It's a pretty good thing to look at. And you'll notice that Bitcoin has been going green. If you go across to market cap and just click on that, you will get crypto bubbles popping up. And one of the things that you can see, there are always opportunities inside the crypto market. This is the way. We're starting to see the crypto is turning around. Over the past 24 hours, there's been nearly 47 million in total liquidations, but you can see the majority are short. When you have a short liquidation, it pushes up price. It's represented as one of these red squares. Go figure. It's exactly the opposite of what it does. But when we look through, we can see that we had a lot of shorts get liquidated, and now it's actually turning to long liquidations, which is pushing the price down. Except, of course, for Bitcoin Cash. Wow, Bitcoin Cash, it's an animal. We can see that the crypto market is slowly turning around. In the last 24 hours, it did come down, but this breakout has it over a level of very short-term resistance. I'm doing recent indicative price analysis. We'll look at the structural levels in a minute. The greatest gainers past 24 hours, top 100, XDC, Maker, ICP, Curve, LDO, Injective, Quant, and Stacks. The greatest losers, top 100 past 24 hours, Mantle, Rocket Pool, BGB, Loom, Comp, Conflux, Atom, and Nia. When we look at total crypto market cap, if we were looking like this, we don't know where the structure is, and structure exists since 2014. What we do see is this support line for the total crypto market has held itself very, very well. It doesn't mean this particular line acts as a brick wall. It acts as a safety net. There's a level of magnetism in it. That means the price can go down below it and get pulled back to it, especially as you see, because there's multiple lines here. We're now starting to see that the crypto market is turning around. And this could be very confusing because you see the main markets just selling down. How could crypto turn around? Crypto is very risk sensitive, and the people inside the crypto market are incredibly educated. They understand risk incredibly well. When we see a push up in price off these structural levels, it favors a movement towards the next structural level. Where is that? That's right up here at that $1.051 trillion mark. That would put us back to around the 10th of October at approximately 10 a.m. New York time. Keep that date and that time in your mind. If total crypto cap manages to get above that particular resistance line, and it's looking pretty good, it's being supported right now, that will actually mean that Bitcoin would be anticipated to reach up to a little over 27,500. But the key to understand, where is the structural support and resistance on Bitcoin? Are we above support like we are with total crypto market cap, or is it some other structure playing out? Zooming in on price action, you can see that we're underneath three structural levels on Bitcoin. One at 26,893 and two smaller ones just up a little, 26,905 and just a little bit more, 26,919. What we need to see in order for total crypto market cap to rally is Bitcoin to trade above 26,941. This is really, really important. If we get a rejection down here, we're going to the next structural level. Where is the next structural level? It's down here, 26,237. This is how you use charts and their structural levels to stack probabilities. Crypto Scotty is the very proud recipient of the Perperatum CTKS Partial Masterclass Scholarship Award. Well done, Crypto Scotty, and thank you so much for your kind generosity to Perperatum. A lot of people applied for that Partial Masterclass Scholarship. To those people, don't worry, because other scholarships will be made available as time progresses. The one thing I truly love about the crypto market in comparison to stock market, Forex, and commodities is you can get in and out 24 hours a day, 7 days a week. I would like to thank everybody for their kind comments. We have such an amazing global family. The key in life is to always be prepared for when things turn against you, because life is always moving in a wave, just like price is. The best way to guard yourself against market volatility is to calm your inner volatility through knowledge. There are certain very important key steps. Get your foundations, look beyond the charts and collect probabilities. Be able to find the market's focus, understanding that opportunities reset every day. Before you buy and sell, it's vital to master emotional control. That's Rule 734 from the Masterclass. There are so many ways to buy and sell effectively, but the key is, the first thing is to get your knowledge, your foundations, and your emotional mastery as well. When you find things don't go your way, it's just the financial markets teaching you a very valuable lesson. After all, you paid for it, so it's important to get the rule out of it. That's why we subscribe as a global family to Positive Excellence. This helps us to learn in the tough times. Losses are very common and very normal inside financial markets. That's Rule 212. The key is to turn your tuition fee into a rule. Please let me know if you have any favorite rules that you've created personally. They're just beautiful to share. Inside financial markets, you will always get setbacks. You will get losses that you can transform into learning experiences and rules. That's why part of the CTKS creed is dealing with specifics. I start small and scale with buy on red, sell on green. This means that any losses that you make will be manageable. You'll still feel them, and you'll feel it to a degree that you say, ouch, I don't want to do that again. That's exactly the time that you should make a rule. By making these rules and collecting them, you're actually saving yourself in the future from repeating behavior that will cause you problems. As a community, we know that life pullbacks give you the strength for the next life rally. And if you're going through a life pullback at the moment, our love and healing thoughts are with you. The sun will come out again. To make the sun come out again, make it come out inside yourself first with a positive attitude. As a community, we always solve our problems with positive excellence, not negative excellence. We are dedicated and committed. We either win or learn and never blame. As we know, the universe wants us to succeed. Every day we can show kindness, integrity, and gratitude. Every day is a new start, because opportunities and life reset daily. No matter what you've been told, you are worthy. Go slow to go fast. To be successful inside financial markets, you need to learn the laws and rules of financial markets. This applies to any endeavor that you would ever undertake. To do well at a job, you need to understand the unwritten rules and unwritten laws of how to succeed in your job. To be a grade A student, you just need to understand the laws and rules, and they are unwritten, on how to get there. If you're taking up a sport and you want to do the best you possibly can, you have to know the written rules and the written laws, and also the unwritten ones as well. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.